Hi guys, Andrew Debono here from Peak Wealth Management.
And Cullen Haynes here from Legal Home Loans.
And today we wanted to have a bit of a chat about, comparing two different types of lending facilities. That's a Chattel Mortgage and a leasing facility.
Indeed. So welcome to Your Money Your Way as well. So let's start with a Chattel Mortgage, or a Chattel Mortgage as it's called.
How is it pronounced?
Yep, Chattel I think is the official nomenclature.
Right.
But when I used to be at the bank, Macquarie, I used to have a lot of people going, I'd like to look into my Chattel Mortgage refinance.
Sounds a lot better that, I think I'm going to stick with the Chattel.
Fantastic. So with a Chattel Mortgage, it's basically a loan on wheels. It's usually given to those that have either an ABN or it's a commercial facility, or if, and here's, it's not really a secret, but not many people know this, if you're using your vehicle and you're a PAYG employee, using it for over 51% business use or above, you can apply to get a Chattel Mortgage as long as you have one of two things. Letter from your employer stating that you're actually using it, or it's from your accountant, and you can get a Chattel Mortgage. The benefits of a Chattel Mortgage is that you can claim back it's like a work expense, a tax deduction. Also, two, you can opt to have a balloon. A balloon, they don't float in the sky. I know you were about to ask that. But it's a residual value at the end of your loan that you can pay when it's a 60-month term, you pay it at the end. Usually on a 5-year term, 35% sounds about right, but you can have that lower than 35%. Basically causes a reduction in your monthly repayments. You're not normally allowed to have these balloons on your consumer loan if you go for a consumer loan. Now, a novated lease.
An interesting one, this one.
So a novated lease is quite interesting. So a novated lease is a finance structure where it's coming out of your pay pre-tax, and it's usually an agreement between the financier, salary packaging company, and your company's going guarantor. Now, there's two parts to it: the finance and the packaging. So, say you've got $200 repayment for the finance and $100 for the packaging. Basically, you get the fuel, maintenance, all those kind of included in, and that comes out of your pay pre-tax. Now, usually on a 5-year term, the balloon is about 28.13%. There is a balloon. There must, by law, be a balloon for novated leases, and they vary 4 years, 3 years, etc. When it comes to the end of your loan, you can either one of three things: pay it out, opt to upgrade, or what you can choose to do is talk to the novated company or the company that got it from and say, hey, what are my options? But mainly, I should rephrase that: two options: pay it out or choose to upgrade.
One important thing to note, I think, is if you did leave your employer, what happens in that situation?
Good point. Now, as I say, sometimes novated leases can be known as the Voldemort of the finance industry, because what you don't get told is if you change jobs or change your role, then it changes the structure. And what you were paying pre-tax, you are now paying after tax. And payments can be quite... it can hurt, especially if it's a $500, $600 payment. Suddenly you're paying that after you get paid.
And the bad thing about that is if you're in a role where you're using your vehicle isn't tax deductible, then you're going to get no tax benefit out of it at the end of the financial year either. Correct.
I want to give a shout out to Keith Scriven, who put this question to us when we asked him asked the LinkedIn community. And as always, want to add value. Keith runs a company called Character PR. Fantastic firm, specializing in all your PR needs. Check out the link in the show notes, and I really appreciate everyone joining us for another edition of Your Money Your Way.
Fantastic. Thank you.
Thank you, everyone. All the best. That's a bobber.